and welcome to Virtual Investor Conferences. On behalf of OTC Markets and Skyline Corporate Communications, we are very pleased you have joined us for our Small Cap Growth Conference. The next presentation of the day is a keynote from Skyline Corporate Communications Group. Please note you may submit questions for the presenter at any time. You can also view a company's availability for a one-on-one meeting by clicking Book a Meeting. At this point, I'm very pleased to welcome Scott Powell, President and Chief Executive Officer of Skyline Corporate Communications Group, who will present the power of corporate communications, lessons for issuers and investors. Welcome, Scott.
Thank you, Greg. It's a pleasure to be here today. Thank you very much to the OTC Markets and the Virtual Investor Conference Series for allowing Skyline to be a sponsor of today's event and for having me give the keynote presentation. So again, good afternoon, everyone. Thank you for being here today. Again, I'm very pleased to speak at the OTC Markets Virtual Investor Conference's Small Cap Growth Session. I'm Scott Powell, President and CEO of Skyline Corporate Communications Group, LLC, a New York City-based agency specializing in investor relations, social media, and financial media consulting services for small and micro-cap public companies, as well as pre-IPO companies seeking a U.S. listing. My speech, The Power of Corporate Communications, Lessons for Issuers and Investors, aims to help public and pre-IPO companies use communications to clearly and compellingly tell their story and to highlight best practices and trends from the investor perspective on evaluating public company opportunities. Let's start from the issuer's perspective. I want to begin by asking a simple question. When was the last time your company told its story, truly told it with clarity, confidence, and conviction? In today's fast-paced, competitive environment, effective communication is essential. It means being understood rather than overlooked, valued, not underestimated, and leading, not left out. At the core, companies deserve to be heard, and heard clearly. That's why corporate communication strategies exist. Nearly every client that Skyline works with soon comes to appreciate the importance of communicating their company's story with precision and purpose. Today, I want to walk you through what that means, why it matters, and how it can transform the way your organization engages with the world and with the financial community. Knowing who you are and saying it clearly. So let's begin with a question every company must answer. What makes your company different? In a crowded marketplace, every organization faces competitors. Every industry is noisy. The top companies cut through clutter and clearly state what sets them apart. That means understanding and communicating your competitive advantages. What does your company do better than others? Where do you consistently outperform? Which capabilities, assets, or processes give you an edge? What can others simply not replicate? Beyond advantages, we must also discuss differentiating factors. So this goes deeper. It asks, what makes your company unique? It is not just that you are better, but also fundamentally different in your approach to your market, your customers, and your purpose. Is it your technology, your team, your methodology, your culture, your decades of expertise, or your bold, disruptive vision? Whatever it is, that differentiator is the cornerstone of your narrative. It is the reason people should choose you, your company, over the alternative investment opportunity. If you cannot say it clearly, confidently, and consistently, your audience will fill in that blank or those blanks for you. They may not do so favorably. Executives must identify, refine, and champion their unique message, transforming it from an internal point into a compelling story that resonates with all audiences. The narrative of growth, the narrative that drives growth. Let's talk about something every leadership team finds exciting: disruptive products and services. We live in an era of rapid innovation. New technologies, business models, and solutions emerge almost daily. If your company leads this disruption, if you're building something that transforms an industry or the customer experience, then that story must be told with energy, precision, and strategic intent. Disruptive innovation is only valuable if the market understands it. That is, from a communications perspective. Investors need to believe in its potential. Customers need to grasp its relevance. And media and analysts need a framework to describe it accurately and favorably. This is where growth strategy becomes equally critical. A compelling growth narrative answers the question every stakeholder is asking: where is this company going, and why should I come along for the ride? It connects the dots: where you are today, the market opportunity ahead, and the credible, executable path to get there. A well-crafted growth story builds confidence, attracts capital, retains talent, and creates momentum. Your mission statement anchors every message. When authentic, clear, and consistent, it becomes your brand's emotional core telling to the world, not just what you do, but why it matters. Together, your competitive advantages, differentiators, disruptive products, growth strategy, and mission form your complete corporate narrative. This narrative must be communicated consistently, credibly, and compellingly at every touch point. Communicating across every critical stakeholder audience. Here is where corporate communications moves from theory into practice, because a great story is only as powerful as the audience that hears it. Every company operates within an ecosystem of critical stakeholders, and each of these audiences requires thoughtful, targeted communications. Consider your investors. Whether you're speaking with institutional shareholders, wealth managers, or retail investors, these audiences are evaluating you on several levels. They review your financials, your leadership team, market positioning and market share, and your vision. They ask, do I trust this team? Do I believe in this opportunity? Is this a company I want to be associated with? Your ability to communicate a consistent, credible investment thesis across earnings calls, roadshows, investor days, and one-on-one meetings directly impacts how your company is valued. Then there is the media. Journalists and editors shape public perception. One well-placed story can elevate a brand. Poor media interactions can cause lasting damage. Preparation is essential. Know your key messages, anticipate tough questions, and speak with clarity and confidence. Do not overlook research analysts. These professionals interpret your company for the broader investment community. Their reports, ratings, and commentary wield enormous influence. The clearer you help them understand your business, strategy, and your competitive positioning, the more accurately and favorably they can represent you to the market. Preparedness is the common thread across all these interactions. Our approach ensures our clients are ready for every key stakeholder engagement. They walk in with the right messages, supporting materials, and confidence to communicate effectively and authentically. Now, turning to the investor perspective on corporate communications, post-pandemic, the investor relations industry now has a large virtual component. Many company annual meetings, corporate presentations at conferences, investor one-on-one meetings, and even IPOs and follow-on offerings are now conducted remotely or virtually. Virtual roadshows for IPOs and secondary offerings were unthinkable just years ago, but now are standard thanks to technology. CEOs now present their company's story and competitive advantages to investors online, eliminating expensive travel. Investors enjoy greater CEO access, even in cities not routinely visited. Before the pandemic, investors' best option was a pre-recorded presentation on sites like retailroadshow.com. Viewers watched slides, but couldn't ask questions or interact with C-level executives. The rise and dominance of virtual corporate communications. So for example, an investor interested in ABC Company's IPO doesn't have to wait for the company to visit their city. Instead, they can access management via a one-on-one Zoom call or join a group webinar. They can also ask questions after the formal presentation. Investors now have greater access to public company offerings and management, as these meetings are often virtual. Geographic constraints used to exclude investors from IPOs, follow-on offerings, and in-person non-deal roadshows. Now, these restrictions are largely gone. The shift has, in a sense, made the IPO and follow-on offering process much more accessible to a greater number of investors. Furthermore, the ability of corporate executives to present virtually to investors, essentially free of geographic restrictions, means that these investors may also have more frequent access to management teams, since CEOs of public companies are now also presenting virtually at conferences and will to some extent to do so in the foreseeable future. A good example is today's virtual investor conference. Therefore, an executive who may have previously passed on presenting in person at a conference due to other company constraints or obligations now has the option to carve out 30 or 60 minutes from their day to present virtually at a conference and then go back to their daily corporate duties, as many of the CEOs and presenting companies here today did just that, thus giving a greater audience of investors access to management and the corporate story. This goes and talks to the democratization of corporate access for smaller issuers. I know executives who are handling daily operational duties for their company and then have carved out time to present virtually at not one but two conferences, and sometimes also host a handful of investor one-on-one meetings, all from the comfort of their home or their office. For investors, there has never been a better time to access company executives. For companies, it is a great time to maximize exposure to investors by presenting and meeting with investors as frequently as they wish, utilizing virtual presentation and meeting platforms. Turning to the next slide, another added investor relations benefit that has arisen is the ability for company executives to better connect with investors. Since most investors must register their name, company affiliation, and email address with a virtual conference as part of the registration process, this investor contact information is often shared with the presenting company, whose investor relations team may then follow up, or agency may then follow up with each investor to send over company materials and or schedule a follow-up conference call with those investors. Capturing investor contact information is mutually beneficial for both companies and investors. It allows for future follow-up and engagement if investor interest continues after the conference presentation or meeting. For example, forums like today's event are an excellent and safe way to engage with investors and communicate the company's story to a captive audience. Conferences, in particular, are excellent ways for investors to ask questions of the management teams of companies they are considering an investment in, to have their concerns addressed directly, and to provide critical, actionable feedback to C-level executives of these public companies. The benefits to investors of this virtual conference's access to company executives are clear and are likely to remain in one form or another. Now let's talk about key investor benefits of modern investor relations. The new virtual world of company executives presenting to investors also unexpectedly benefits investors. It provides them with greater transparency and accountability, as executives are more frequently available to investors via virtual conferences, webinars, and one-to-one meetings. The investing public does not have to wait as often for quarterly or annual company earnings conference call presentations to hear from company executives or hope to secure a one-on-one in-person meeting on a non-deal roadshow, since these companies are more front and center these days. That is, they can present more frequently due to virtual options that they now have that didn't exist previously. Investors are more likely to ask management questions and hear from company executives more often, as there are more frequent interactions with the investing public through these virtual offerings like today's. This also creates an expanded platform and an essential opportunity for investors to learn about the companies they're interested in, the industry and industry trends in general, and how those may positively or negatively impact those companies, and to ask questions of the companies and their executives. Finally, social media's ubiquity, importance, functionality, and utility have been highlighted and augmented in recent years. These platforms provide investors with another communication modality that facilitates interactions between shareholders and the companies they follow. While not a shortcut for traditional research and due diligence, this is a great information resource for investors. Most companies that use social media will repost their press releases, showcase their business, announce upcoming conference presentations and earnings conference calls, and share relevant industry articles there on their social media platforms. All of these social media posts should benefit investors, as they now have additional information and content to learn more about a company and the company's industry, which will support their due diligence process and ideally expedite their investment decision. Finally, in closing, your story, your corporate story, deserves to be told well, and the benefits to the investment community. So as I close today, I want to return to where we started. For corporate issuers, with that simple but profound question, when was the last time your company truly told its story? Because your story matters, your vision matters, your competitive advantages matter, your growth strategy matters. And the way you communicate all of it to investors, to the media, to analysts, and beyond determines how the world sees your company, values your company, and chooses to engage with your company. Corporate communications is not just messaging. It is strategy, it is leadership, it is reputation, and when done right, it is one of the most powerful tools your company has. From the investor's perspective, especially for smaller funds and retail investors, the time has never been better to access public company management teams, just like today, thanks to the technological advances over the past several years that have aligned objectives in a streamlined manner. Investors want to understand corporate stories and what differentiates one company from the next in terms of competitive advantages, disruptive products and technologies, growth strategies, and so forth. Companies and investors alike, it is time to take advantage. Once again, I'm Scott Powell, President and CEO of Skyline Corporate Communications Group, LLC. Skyline Corporate Communications Group is a New York City-based investor relations agency with locations in New York and Boston, dedicated to providing investor relations and corporate communications services to small and microcap public companies, as well as pre-IPO companies across industries and geographies. We're a senior level team with over 300 years of combined experience in capital markets, finance, law, direct investments, board seats, operational management experience, CFO and COO positions at public companies. We work with a lot of pre-IPO companies as well. We've worked with hundreds and hundreds of small and micro-cap public companies and pre-IPO companies from across industries. We're highly capable, responsive, and effective experts in investor relations and corporate communications for smaller, somewhat underfollowed public companies. We encourage you to visit our website at www.skylineccg.com, our LinkedIn, Twitter, and StockTwits pages, our YouTube channel, or to email or call us directly at the address, phone number, and email address on your screen here. Thank you again for your time and attention today. Thanks to the OTC Markets Group and virtualinvestorconferences.com for the opportunity to sponsor today's Small Cap Growth Virtual Investor Conference and to deliver today's presentation. I'd now like to open the floor to questions. Please put any questions into the Q&A box on your screen, and I'd be happy to answer any relevant and pertinent questions that the audience may have. Thank you very much for your time and attention today. Much appreciated. Okay, so looking to see any questions that have come in. Again, if anyone from the audience has a question, please put it in the Q&A box. You will remain anonymous. I won't read your name. I'll just read the question. So let me just have a look at the questions, and I'll start with the first one. So one is about research coverage and research analysts. So the question is, research analysts and media can dramatically shift sentiment. Can you discuss how Skyline is currently positioning select clients to attract that first analyst note or feature story that can really, I think there's a typo, that can really, something a name, I think it probably is talking about can really promote a name or interest. So research analysts and media are different, are different verticals. On the research side, for better or for worse, it's largely, research coverage is largely driven by either economics or the need to cover a name. What I mean by the need to cover a name is some companies are so large and prominent that research analysts just cover them if they're in that particular sector because they want to be covering the leading companies. So think of Tesla and Amazon and some of your mega cap companies. So sometimes analysts just need to cover them because the companies are so large and they're talked about so much in the press. For the smaller public companies, it unfortunately, for better or for worse, it comes down to economics. So generally, if the bank leads your IPO and they have a research department, they'll often issue research coverage as soon as they're able to post IPO. In other cases, if you're involved in a transaction with an investment bank, then that bank is likely to issue research coverage when it can, but it's often based upon follow-on offering, IPO, M&A transaction, advisory work, and so forth. And then there's sponsored research where the company would just pay the research firm directly for research coverage that's disclosed. And on the media side, we do have a PR financial media division, and we work very hard to craft the competitive advantages and the exciting parts of a company's business to the financial media community in the hopes of getting an interview or a quote, an article written on one of our client companies. So it's really taking a lot of what I mentioned in the presentation just now and presenting those compelling competitive advantages to the media. It's a lot easier if the company's in an industry that's talked about a lot in the media because the media is more likely to cover something. Currently it's all EV and AI and blockchain and crypto right now. So companies and data centers and so forth. So companies that are in those industries or are supporting those industries, it's a lot easier to get media coverage. And again, our team works hard to get research coverage, to get media articles. We've gotten a lot of media coverage for clients over the past few years. So hopefully that answers that question. There are a couple other questions that I'd like to get to. The next one, the question is, the modern IR landscape is noisy. How is Skyline using social and digital channels right now to keep small cap stories in front of investors between big catalysts like financings or uplistings. It's a good question. The way that we approach social media, at least one of the ways that we approach social media, is we have a team that will look through each of our clients that's hired us for social media advisory work. And what we'll do is when the company has a sort of a break between press releases, maybe it's a light month, they only have one press release in June, our team will create 3, 4, or 5 posts for their corporate social media sites for them to post sort of in between press releases. So in the week or weeks where they don't have a news announcement, we can post 1 or 2 pieces of content on their, where they can post on their social media feeds that we create. What we do is we'll look at the company's industry and look for interesting developments or trends within that industry. So not necessarily company specific news, but industry news that's interesting, that is educational, that helps the investor understand the ecosystem in which our client operates better, and create a post. And if it is a development or trend in the industry that could potentially benefit our client, we'll talk about that trend and then maybe tie it back to how it may benefit the client down the road. So maybe it's government policies that are encouraging spending, or emission standards, or things like that that may increase EV sales. Or maybe it's a demographic trend that's showing spending in a certain sector amongst a demographic age group that's growing in that particular region or country. Things like that that may benefit our clients down the road. The clients then can post on their corporate socials. What this does is it helps to engage in between press releases. It helps to deepen the knowledge of the investors following that particular company, of that industry and ecosystem in which they operate. And ultimately, if you educate, engage, all else being equal, that investor is more likely to invest in your company than in another company that doesn't really post very much about their industry, because the company that is actively posting, the investor perceives and believes that company to be more on top of the industry, therefore able to identify opportunities, avoid pitfalls, and so forth. So that's how we think about how this, using social media to keep our client stories in front of investors and keep it fresh. And then I think there's one last question, and then I think we're close to being out of time. But the question is, virtual formats now let CEOs present globally and hit multiple conferences in a single day. That is true. How is Skyline helping clients build a consistent long-term story across all these appearances so investors stay engaged between events? That's another great question. And on the conference side, we maintain a master conference calendar. So we're aware of virtually every conference happening for the next 18 to 24 months, both virtual and in person around the globe. And what we do is we curate for each client and pull out conferences that are relevant for that particular client to consider presenting at. So maybe it's because it's industry specific that fits their industry, or maybe geographically it's where the country or state in which they're domiciled, so it's easy for them to get to that conference. Maybe it's virtual, so it's really convenient for them to attend. And so we have a conference calendar that we recommend to these clients. They decide which conferences to attend. In between the conferences, we run some virtual presentations called the Skyline Signature Series, where we have the client present virtually for an hour to a group of our investors, Q&A session. We do in-person non-deal roadshows. We have clients mostly come into New York City because they're coming in for a conference or to meet their lawyer or banker or to host a bell ringing at an exchange. So in between the conferences, we'll have them do these virtual webinars. We'll have them do virtual one-on-one meetings that we set up with investors, wealth managers, in-person roadshows. And then we're answering questions regularly from investors. We're creating content for our clients to post on their social media channels. We're helping clients issue press releases. Maybe we're doing a quarterly earnings cycle for them to report earnings. And then some clients hire us for financial media. So in between all of that work, we're getting articles, TV interviews, things like that. I had a client in New York last week, and I got them 3 TV interviews. I got them on Cheddar TV, Innovators with Jane King, and CNBC Italy, all in the same day. And we do a lot of good media work as well. So hopefully that answers all of your questions. I think we're down to the last 30 seconds, and that seems to be all the questions we have. So again, thank you all very much for listening to my presentation today. Thank you to the OTC Markets for allowing Skyline to co-host today's and co-sponsor today's conference, and appreciate everyone who attended. There were some really great companies presenting today, and again, it was a pleasure to be here to present and to be a co-host and sponsor of today's virtual investor conference. Thank you all very much. Have a great day.